Hey guys, welcome back. I'm going to keep this video relatively short. I just wanted to talk about a couple more things happening right now. So we had the CPI report come in, and what we see is that the inflation grew. Yes, it did grow, but it grew slower than what was expected. So the inflation did hit 3%, but what we ended up seeing is the markets reacted positively to this because it didn't go up as much as was expected. So today we're up 1%. This is also potentially tied to the fact that the federal interest rates can't get cut unless we see inflation not going up like crazy, because there are two sides to the economy problem that the Fed would try to address. There's inflation and unemployment. Inflation goes up too much, you can't cut interest rates because interest rate cutting causes more inflation. But if interest rates don't get cut, then unemployment could remain really high for a long time. Now, right now we have a bit of stagflation because inflation is at about 3% and unemployment rate is, I think, also not too low. Yeah, we're looking at 4.3% in August 2025. So the Fed needs to make a decision on whether or not they're going to cut. And it seems most likely that Fed 2025 October cut is going to happen. You can see right here, there's about a 97% chance of a 25 basis point cut. This is coming from Polymarket with $123 million of volume betting on this in this pool. So we know that the cut is most likely going to come. What does that mean? That means inflation will continue to go up because lowering interest rates makes money more liquid and people are going to be able to borrow more, spend more. And that's why I'm still bullish on gold. One of the things that we'll have seen in the past couple of days is that gold had this massive push down. And I think this is actually pretty healthy because this is profit taking right here. There's no reason for gold to go from what? This is gold miners, by the way, and it's 3x leveraged. But even so, look at this. You go from about 200 to 270. So that's about 35% growth in the matter of 1 week. 35% within a week, you gotta take some profits there. I, however, was not one of those people who took profits, so I have to suffer the consequences of eating this, which is the drawdown right here. I do, however, anticipate that this is going to come back up. I don't know if it's going to necessarily come back up to this peak, but I know for a fact that lowering your interest rates will be inflationary. Inflation means generally a weaker dollar. And of course, there's other factors that go into this. So it's not necessarily that the dollar will weaken, but when the dollar weakens, usually gold is a safer bet. And if we also anticipate another interest rate cut in December, then it would make sense that people will continue to try and hold on to gold, especially with the Trump-China tariffs and potential more escalations and things like that. I think a lot of central banks from different countries are going to look at that and say, well, I don't know if I want to hold US dollars right now. We'll continue to watch and see what happens. Maybe the prices actually drop even further or something. I'll probably have to rotate out of my positions in that case. Now, I wanted to talk about a couple of interesting stocks today, specifically O'Reilly, Jazz Pharmaceuticals, Carpenter Tech, Interactive Brokers, Primoris Services Corp, and that's it. Yeah, just these 5. The reason I wanted to talk about these is because I was looking at what hedge funds seem to be interested in the past quarter and potentially forward looking to the next quarter. And these emerged as some pretty interesting choices. It seems like a lot of these hedge funds are trying to look for opportunities in smaller markets now. O'Reilly, if you don't know, they have this really catchy jingle and they play on Spotify advertisements all the time, on the radio all the time. It goes something like, oh, O'Reilly. Obviously, I'm really out of tune, but it's really funny how annoying the jingle is, but how stuck it gets in the head. Anyway, they are focused on auto parts, automotive. No, sorry, not. Yeah, just auto parts for cars and stuff like that, and supplies, equipment. They've been doing pretty well, and it's interesting one to look into. It seems like their growth has been pretty steady and consistent. Jazz Pharmaceuticals is focused on two things: oncology and neuroscience. So that's cancer and brain stuff, basically. I'm usually more hesitant when it comes to pharmaceuticals because I think there's so many things that could potentially go wrong. Like you could have government regulations, you could have competitors come up with something that's a little bit different but easier or better or something. You could also potentially have results that say one thing and then the next trials they say another thing. Biology and the human body are really complex, so I tend to be more skeptical when it comes to pharmaceuticals. Carpenter Technology is a company that's focused on stainless steels and a lot of different kinds of materials for 3D additive manufacturing. I think that this one is really interesting because what we see is a lot of US construction will probably benefit from these tariffs and from these protectionary measures relative to competition from other countries. So it does kind of make sense that as we see all of these tariffs come into place, companies like this one stand to benefit from higher demand because of increasing cost from external international sources. Interactive brokers is one that I'm actually very keenly interested in. I actually think that this one is really interesting because it's kind of like Robinhood. Well, Robinhood would be one of the top competitors, which is why you see it's related here. So Robinhood is, of course, a trading platform for a lot of retail traders. It's very user-friendly, really nice interface. The way I see it is that Robinhood is like Apple and Interactive Brokers is like Microsoft. It's Interactive Brokers is much more reliable. It's used for a lot of corporate uses and probably more formal at least, much more technical, a little bit harder to use, but you can do a lot more with it. Robinhood, there are some things that you can't do, like you can't have 1 minute ticker data, so you can't look at minute to minute interactions. I think now you can. They've been introducing a lot of features recently, but they're more hip, they're more to appeal to retail traders, so they'll have things like sports betting now and all different kinds of betting pools, which is why I'm very bullish on Robinhood still. Interactive Brokers doesn't have that same mass appeal, but I think it is still a pretty steady investment. Both of them joined the SP 500 this year, so I'm going to keep an eye on both of these. Finally, there's Primoris. This one is pretty interesting because it's construction and infrastructure. It focuses on natural gas, wastewater, and water, so it's more basically of utilities. Now, I'm not sure how to feel about this because when it comes to utilities specifically, I think you have to look at the real estate market and what's going to happen there. With US construction being potentially threatened by tariffs, I don't know if this is necessarily a good idea, but I think that they've been doing really well because they tend to be an American-based company, and if you're going to look for infrastructure, especially depending on when you're trying to build out more infrastructure related to things like, let's say, data centers, that could be of particular interest. But you have to look at who their customers are. So I wouldn't be surprised if a lot of their customers ended up being some folks in tech or something like that, which is what's driving this growth. But these are generally just a couple of interesting stocks that have been moving up lately. Past returns are not indicative of future returns, of course, but I think that ideally you go dive into this yourselves and try to see if there's anything interesting for you there. For me personally, I think the most interesting thing is Interactive Brokers because I'm a trader. I'm using Alpaca right now to do some automated trading. And until I see some really convincing argument for why I should switch over to Interactive Brokers, I think I'll just continue to watch it. But otherwise, I do find it really interesting because specifically for day trading and things like that, I think then that people have talked about how this is the one to use. It's much more professional. You don't do payment for order flow. So in other words, your trades aren't going to those big hedge funds and stuff like that. There could potentially be a lot more opportunity there. I don't know. We'll see. I think that's about it for today. I wanted to keep it pretty short, but thanks so much for following, and I hope to see you in the next one. Let's keep seeing what happens with the Fed and the economy. All right, stay safe. Bye-bye.